Texas Instruments stock hit a 52-week high this past Friday, reaching $313.15. The surge comes as Seaport Research Partners upgraded their rating on TXN from neutral to buy, setting a $400 price target. The firm's analysis centers around a growing demand for AI power chips in data centers. As artificial intelligence systems scale, so does their energy consumption. This has forced data center operators to rethink how they distribute electricity, and Texas Instruments is positioned to benefit from that shift. Seaport analyst Jay Goldberg argues that the increasing electrical density in server racks is pushing companies to redesign their power architecture, and TXN is uniquely equipped to supply the necessary components. The stock's recent performance has been impressive. Year-to-date gains have exceeded 72%, and the company reported first-quarter earnings per share of $1.68, well above the $1.37 expected by analysts. Revenue climbed 18.6% year-over-year, with the data center segment growing by approximately 90% in the same period. These numbers suggest that demand for TXN's products is not just speculative, but already translating into real financial results. However, the story isn't all positive. Recent insider transactions show executives selling shares in the millions. The CFO and a board member have both reduced their holdings, which could signal a lack of confidence or simply personal financial planning. Still, the overall market sentiment remains bullish, especially with Seaport's upgraded rating, and most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The broader trend toward AI-driven infrastructure. What makes this development significant is the intersection of AI and energy. As AI models become more complex, they require more computational power, which in turn requires more electricity. This creates a need for more efficient power distribution systems, and that's where Texas Instruments comes in. The company's semiconductors are used to manage and regulate power in high-density environments like data centers. As more companies invest in AI, the demand for these chips is likely to grow. The Seaport analyst's bullish outlook is based on the idea that this trend is structural, not cyclical. If data centers continue to evolve their power architecture in response to AI workloads, TXN's role could become even more critical. That's why the firm sees room for the stock to rise to $400, but the market is also watching for signs that this momentum could stall. Executives selling shares could be a red flag, though it's not uncommon for insiders to diversify their holdings. The broader implications of this trend go beyond Texas Instruments. The demand for AI power chips could reshape the semiconductor industry. Companies that specialize in energy-efficient chip design may see increased interest from investors and data center operators alike. At the same time, the need for reliable and scalable power infrastructure could lead to more strategic partnerships or even new market entrants. 4. Now, the key signal to watch is whether the $400 price target is reached and sustained. That would suggest that the market fully embraces the AI power chip narrative. On the other hand, if the stock starts to correct or insiders continue to sell, that could indicate uncertainty about the long-term outlook. The next development to monitor is the company's upcoming earnings report. If the second quarter shows continued growth in the data center segment and reinforces the trend of strategic price increases, that could further validate the bullish thesis. Conversely, any signs of slowing demand or increased competition could temper investor enthusiasm. In the meantime, the broader market is paying attention to how most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. AI adoption affects energy consumption. If major cloud providers or AI firms begin to publicly discuss their power challenges, that could provide additional context for TXN's role in the ecosystem. The more concrete the evidence of structural demand, the stronger the case for the stock's continued ascent. Ultimately, the story is about the intersection of AI and infrastructure. As AI models become more powerful, they also become more energy-intensive. That creates a need for more advanced power management solutions, and Texas Instruments is positioned to provide them. Whether this trend continues to drive the stock higher will depend on how quickly the market adopts AI and how effectively TXN can meet the resulting demand.